Good morning, good afternoon, good evening, and welcome to the Wednesday the 9th of March Bull versus Bear webinar for Trade Day with Steve Miley on the call. So welcome everyone. We're going to go through our usual normal run through in here today. Calendar, what we've had, what we've got coming up, what's important in markets right now, taking a look at the major news wires, what's happening right now on the macroeconomic geopolitical side. Obviously geopolitics still front and center at the moment, and then we'll take a look at and some the articles, the major news, and then we'll take a look at some charts to see where the opportunities lie. So let's kick off with the calendar first of all. Remember, the calendar's been fairly light this week. The big piece of data we have, actually, if I flick onto the calendar going into tomorrow, with the US inflation data, the CPI data. But flicking back to today, in here, it's a fairly light calendar. The oil inventory is probably the main thing we're going to focus on in here today. We got that all coming through at 10:30 in here. The various oil data and energy and data coming through 10:30 Eastern time, 9:30 Central time. So keeping an eye on those. Other than that, it's fairly light calendar. Obviously, that could have an impact on here on the certainly on the oil market. But obviously, oil being dancing to the beat of a different drum in here at the moment with everything that's going on, Russia, Ukraine. But nevertheless, could be significant. So certainly keeping an eye on that, and then may have a knock-on effect into the indices as well. To some extent, commodity price fluctuations are being echoed, or the inverse. There's an inverse correlation at the moment between say energy prices pushing higher and stocks going lower because of inflationary fears from those higher energy prices and the destabilizing effect of surging energy, and not only energy, other prices. We spoke yesterday about nickel, the surging price of nickel. Steel prices are up. Gas prices, European gas prices, went through the roof early this week. Wheat has been surging higher as well. So all of this destabilizing effect. We've got an inverse correlation at the moment to some extent between stock indices and commodity prices. So certainly the crude oil inventories can potentially feed into that. So we'll be watching out for that later today. What's going on in markets right now? Well, still, all about Ukraine situation, clearly. And today, really, we're seeing stock indices rebound in here. But, markets kind of, no real new news. But I think a lack of any new negative news seen as a positive. Markets, by markets, I mean then stock indices, stock markets in here globally have been under intense pressure over the last week or so, and managing, a couple of times in here during the European morning and the overnight session for the US, markets have tried to rebound and rebounded going into the early part of the US session, and then not been able to hold on to those recoveries and given those up. Yesterday was a good example of that. A really decent initial sell-off, then a strong rebound, and then a very weak close. But again, in here during the European session, the European morning session we've had, and the overnight session for the US through the very early hours, we've seen European equity indices rebound. We've seen US futures pointing higher, and we'll come to look at those. Well, actually, we can look at those right now. So if we take a look, we've got in here, here's the European indices. You can see up between 3 up to DAX is up nearly 4.5%, FTSE is up 1.5%. So we're anywhere, in here we've got some indices up, nearly 5% in here. So anywhere, most indices, up at least 3% to 5% today, with no real new news, right? This is the nature of the markets at the moment, guys, and, I stressed this yesterday. We've been stressing it for the last few weeks, not becoming tied to positions. This is nothing really driving this apart from, if you look at the headlines on, say in here, it's like, where are we? I had them earlier on, value buyers coming in. Look, buoyed by dip buying, right? In here, we've got, in here, what we got for, what have they got the headlines in here from? So banks and autos have led the way, by the way, on the European stock rebound. But again, in here, look, European stocks open high, investors way up, oil bans impact. So the oil ban was obviously a negative to its markets lower yesterday, but the oil ban on Russian imports into the US. But all of this, we've had no new news, and markets are all the way back, to where we were kind of yesterday, at the higher points of yesterday. So markets are very much prone to shift in direction very quickly. And I think it's a matter of you have to keep an eye on the charts, keep an eye on the flow in the markets in here, and do not become married to any kind of view. I spoke yesterday, to an extent, I'm kind of a natural bull. I was, I did a lot of my early career was in bear markets, but I'm kind of a natural bull on stock indices, particularly the way markets have been very, very, very resilient through everything that's been thrown at them in the 21st century, in the last 20 years, very, very resilient with the global financial crisis, the pandemic, and now what we have going on with Ukraine, Russia in here. Global financial markets, equity markets have been very, very, very resilient and do tend to rebound after corrections. We haven't had significant, even the global financial crisis, haven't had significant short-term crashes on markets. So more orderly corrections, you would argue. But I think in these kind of environments, what you have to do is not become married to, not become tied to a bullish or bearish sentiment. You have to go with the flow, and that flow can change within the day. And yesterday was a case in point of weakness, strength, and then weakness again. Three kind of moves within less than a 24-hour trading period. So and we've already had strength today. Who's to say we're not going to see markets sell back off, back down to the lows? With those European markets up 3, 4, 5% today, they could give all of that back up again. So I'm not expecting that. Looking at the charts right now, they're looking healthy again, these stock indices, and we'll come to that shortly. No real new news in here. If anything, we've got more sanctions coming and more negatives, potentially in the market. But we have commodities pools. Again, I mentioned there at the top, talking about the inverse correlation with at the moment with stocks and commodity markets, and commodity markets just not necessarily going down, but just not going up, or not going up as much, or just correcting slowly lower. Nickel trading in London remains suspending, and the crude oil and dipping lower in here now. So, but not huge. Gold dropped, wheat was lower. So commodities, not necessarily reversing to the downside. They're not aggressively bearish, maybe on a day trade perspective, but the longer term bull runs are very much intact. But the fact that they've had a pause, they've had a correction, they're taking their breath, is allowed equity markets to rebound in here today. So and more talk about stagflation in here. Stagflation, now, for those of you who don't know, it's an economic term that means you get both stagnation and inflation, right? It's the economist, it's the central banker's worst nightmare. So we've already obviously got significant inflationary pressures coming through. We've already had those coming through from late 2021 through the beginning of this year. Hence, the global central banks, but led by the Fed, have been more hawkish in their tone. So we've had these inflationary pressures. They've been exacerbated now by the very aggressive moves higher in commodity prices. They're going to put upside pressures on already accelerating inflation, and that then gives the threat of derailing the economic recoveries, the post-pandemic economic recoveries, and we could go into a period of stagnation where you get high inflation and low growth rates. Okay, so that is a real threat and a real difficulty for central bankers going forward. Stocks rallying, we know that. We've already kind of gone through that in here. Focus pretty on talk about the data in here. So crude oil inventory is probably the key data to be watching going into today. Incidentally, so there's 5 things to start your day. If I just go back to hopefully the homepage. So here's the Reuters homepage. If you're not getting it, you can get this. So Bloomberg, most Bloomberg articles in here you have to pay for. I do have a subscription in here, but so I can share this stuff with you. But most stuff you can't get for free. However, that 5 things that you need to start your day is a free article that you can get, and you can sign up to the newsletter. It is. You can tick this box if you want to do that. But if not, go to the homepage. So it's the bloomberg.com/markets. Okay, you can see up here /markets. You go to that page. I'll just put that actually into the chat. So if you are watching live, you'll see that go into the chat. So and then you sign up. From the homepage over here on the right hand side on the right bar, the most important market news of your day. You get that, and then that's tailored to your own time zone. So you'll get that, basically when you wake up in the morning, it comes through early hours. So it comes through, I get it into the UK between 6 a.m. and 7 a.m. On a recap of effectively what's happened since the European markets have closed. So a recap on US and Asia. And so obviously if you're getting in the US, you'll be getting a recap on what's happened in Asia and Europe. And what's, and heads up on what we've got coming up in the US session. So it's a useful free resource to get into your inbox. US futures buoyed by. So this is when a journalist, it's not lazy journalism. It's just that there's nothing really pushing markets back up again, right? So buoyed by dip buying. What is it saying here? Well, just people have come in, stepped in, and bought it, right? So it's gone back up again. Yeah, not really telling us anything. Equity advisors, dip buyers wagered the global economic escalating sanctions rate has already reflected in market prices. So basically, just saying that there's value in the market, so the markets bounce. We haven't actually had any kind of real new news to drive markets back higher, apart from the fact that they're very oversold and they've been selling off up to 2 weeks now. So US futures extend gains as dip buyers return to risk assets. Same thing in here again. And then we've already looked in here. These we're up, say between 3 and 5% on US indices, and again you look stocks open high, investors way up, oil ban, and then we've already spoken about the banks and autos pushing higher. And if we look at US indices in here for this morning, you see on the futures we're up between really pretty much around 1.5%, S&P and Dow, with the NASDAQ up nearly 2% in here this morning. Forex Live, there was a couple of articles I just wanted to show you here on Forex Live. New sanctions on Russian individuals coming through from the EU. Russia says will shortly define list as goods subject to import and export bans. That could be interesting if they start banning exports of gas. But I mean, you can't really see that happening. That would be a massive escalation on the economic side. Moscow says US has declared economic war on Russia, coming from out of the Kremlin. So these are all kind of quite negative. EU agrees new sanctions against Russian leaders and oligarchs. So all of this is kind of quite negative, but market's not really reacting in that way, and we've already looked at it, reacting quite positive. Just a nod to the CME tool on the rate hike for next week, still fully pricing in pretty much a 25 pip, a 0.25% rate hike with a very, very small chance of no change, but pretty much pricing in, but with nothing pricing in for a 0.5% rate hike in here. Right, let's take a look at those charts in here. So we're going to kick off with the S&P 500. So you can see there's yesterday's price action. We saw the initial sell-off, a really strong rebound, and then a very weak close in here. We're zooming in a second onto an hourly chart and take a look at that. But then the market, you notice, though, holding above this late January low from the late February low. And you can see even with this, this is the one I was thinking of, the late January low. So we had the late January low. The market kind of undercut that back here in late February on the 24th, and then rejected. We had this strong hammer pattern, and then we've gone back through, we've held this low, but back through that same low over here over the last couple of days. But you can see that kind of hesitant. We only just closed below there back on Monday, and then yesterday we were down and back up again and closed then back down below. This is, remember, the January low. We're not below the February low, and then a really strong rebound in here today. And let's step in now and take a look at that 1 hour chart. So here's the 1 hour chart. There's the January low. Remember, we had the inverse head and shoulders here on the January low. The inverse head and shoulders, and then you kind of just about broke the neckline and fouled misery. So you've got the bigger neckline running across here for the inverse head and shoulders. It was flirted with that trend, that neckline, didn't really aggressively break it, couldn't hold above the neckline, and then we've gone significantly lower. Interestingly, down here from yesterday, so we saw yesterday the market sold off, rebounded, sold off, rebounded again, and then another sell-off, into the close. There's the close in here yesterday. But what's interesting for me here is now down at the bottom. Let's just get rid of some of this old stuff. Leave the bigger trend line on. But down here, you've got a triple bottom in here now. 1, 2, 3 lows, all pretty much around the same area. Around 41, 48 to 41, 37 in here, 39 kind of area. So you got a triple bottom, 1, 2, 3 lows down here, holding above the low in here, which forms the head of the inverse head and shoulders back from the 24th of January, 24th of February, excuse me. So a triple bottom forming down here. So the market needs to get all the way back above yesterday's high to confirm that triple bottom. We've also again got this accelerated trend line that comes down through here. So I'll just draw that on. So you see you've got this trend line comes through here. And you can see the market went back up yesterday to that trend line. So this trend line comes down from the 3rd of March. So I'll just zoom in a little bit in here. Okay, so 3rd of March high, and then the high through here from the 7th of March. And you can see yesterday we went up at the highs yesterday, flirted with that trend line, came back lower, and now is up playing with that trend line. So today's open on the cash market open is going to be important, right? So if the market can get and hold decisively above this downtrend line and hold, that's going to be important. If it then can go and attack the high from yesterday, so the high from yesterday's up at 42.75. If it can get above there, then you've got a triple bottom confirmed. So we've got some trigger points in here, we're flirting with the trend line at the moment. You could redraw this trend line. So there's an argument to be had of, do you redraw the trend line? Actually, I'll just put another trend line on. Through yesterday's high, and then on there, look, we're not quite through that trend line. So somewhere around here, if we can and I say it won't be till the cash market open. Remember, we've got no significant data coming up, in its usual slot, the 9:30 slot. We don't have any data there. So in here, that's the data we would normally get in 45, 50 minutes time. So the market in here is flirting with this trend line. So I think it's not until the cash market open that we're going to get a resolution with this trend line. And for me, all the threat is back higher. I know coming into these, but it's odd. The European mornings, the market sets up more bullish, which you kind of wouldn't expect in a lot of ways, because obviously European markets are taking the brunt of this because of the location of the conflict. But nevertheless, European markets seem to give more positive signals through their morning, pull the US futures up with them, and then the US futures, although resilient usually through the US equity market opens, the tail of the tape for the last few days has been very, very weak closes. A lot of selling going into the close, and markets giving up gains that they've made maybe through the session going into the close. So it'll be interesting if we can buck that trend today. So looking, going to have a strong open, obviously, from the cash market open. It's going to be up when the cash market opens in just, in an hour and a half's time or so. But then it's whether it can hold on to those gains and say critically, initially hold above these trend lines. And then if we can get above that high for a triple bottom down here, then it could open up, I think, significant upside in here, maybe towards this peak up here. So we'll be aiming up, above 4,300 towards 4,310. So I think that's a real potential in here for today. Let's kind of have a look at similar on the NASDAQ. Not much to add, similar stuff in here. So NASDAQ went down towards the February low, held the February low, again rebounding in here today, going in. And this is a 15-minute chart, so I'm going to switch it out to the 1 hour chart. And you can see in here, similarly, 1, 2, 3, triple bottom, redrawing the trend line. Going to take this trend line off. You've got similar dynamic, obviously, high correlation between these. So the sell-off in here from the 3rd of March through the peak in here, you can see we flirted. If we draw another trend line coming through actually yesterday's high. So you got the high there again. So if you draw it off of the 7th of March peak in here, yesterday we flirted with it. Now we're way above that, way above it and holding. If you do the redraw off of yesterday's high, not as good a trend line, you would argue. Then the market's flowing. You could argue there's a shallower trend line, not off the actual peak from the 3rd of March. This shallower one that maybe comes across from here. you'd argue across here, and again flirting with that one, and it spiking through there, ignoring that peak there. So, but the market's certainly playing with various trend lines in here at the moment from the downtrend that we're seeing for the first part of March. Again, critical really is going to be for the triple bottom confirmation, which is above yesterday's high, 13,666. Okay, on the NASDAQ. Right, let's give a nod to the commodity markets and then I'll wrap us up. So on the commodity side, what have we got? Well, let's take a look at the, obviously oil and gold in here backing off today. So here we go yesterday for oil inside daily pattern. Notice we had the big spike higher up on Monday. Yesterday market was positive but consolidated. And remember, we gapped up now. There was a topping pattern. We'll see that still further developing, particularly with the sell-off we're seeing in here today. So we go into the 1 hour chart now. There was the big gap that we had up on Monday to a new multi-decade high. Market came all the way back down to close the gap, then a strong rebound. Back up higher yesterday, failing below the high. So now you get a double top pattern. And obviously that does confirm to below Monday's low in there, which is all the way down at 115.54. That would be a real negative development in here. And we're already down below in here, this swing low in here from yesterday. So this is setting up really negative. You can easily see it being down, back up and challenging that low. I think that's the real threat in here, that you do get a deeper correction. Because obviously if we go back to the daily chart, this market's very overbought. It's been very overbought. And see what we have in here? This is called a divergence. This is a bearish divergence. You see the high there. This is back from the the 2nd of March. Okay, 2nd of March, the RSI makes a high here, and it does manage to get higher than the peaks here. So confirming, this is confirmation up until this point. And then we make the new highs up to here, and then the market doesn't make a new high on the RSI. This is a bearish divergence, sometimes a bearish signal. And already in here, look, you've got a double top formed on the RSI. People chart the RSI as well. You can do that. And if you look at the RSI in here now, it's giving a very negative signal. And you've got a double top on the RSI and you had a bearish divergence. So that's signaling a deeper correction. And the real trigger comes through that low, as we said in here. You got the initial low in here. We do have the low swing low from yesterday at 1707, but 1554 is going to be critical. But through 1707 would be a real negative. But already, I think setting up negative, I'd be happy shorting that right here, right now. And not dissimilar, not quite as negative on gold. And gold did make, oil didn't make another new high on Tuesday. Oil made another significant new high on Tuesday, but setting back today. Let's take a look at it now. I've got 15 minutes here, but let's go out to a 1 hour. And so there's yesterday's high, down lower. You could argue double top pattern already formed. Not really a classic double top. They're not really near each other, these two highs. But down through this low in here, it was triggered. The low there at 2027.1 triggered. Now we're rebounding. Opportunity maybe to sell on this rebound here. So, you may be buying it down lower, closer to this trend line. This trend line that comes all the way up from the 28th of February. So you got this shallower trend line through here. Looking to maybe buy into a dip, and that'll be deeper towards back below 2000, 1990 to 2000 kind of area, back down towards this trend line. Between here and there, though, I think there's a sell opportunity, and then you'll be zooming in here, looking for this rebound. We've got to fade. If we see a fade on this rebound, as this little rebound rolls over, you see it's a bit of a dead cat bounce, had a significant sell-off. Dead cat bounce. Why dead cat bounce? Well, dead cats don't bounce. It's a shallow bounce. If this starts to break down again in here, probably looking to short this at the moment. So playing it from a risk-on theme in here at the moment, commodities lower and looking for equities to rebound. But do not become tied to anything, guys. As I've stressed. These markets are prone to change, on a dime in here, and we could easily see markets reversing current moves and current signals that we're getting. So, if they do reverse and they give you reversal signals, and we go back into a risk-off mode, equities down, commodities up, then you have to go with those as well. Okay, all cool. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe out there. I'll be back with you with another bull versus bear webinar tomorrow. Bye.